Oil costs regular as marketplace Juggles deliver shortage. Call for concerns. Singapore oil fees steadied in Asia trade on Friday, after hitting their lowest levels on the grounds that before Russia's February invasion of Ukraine in the preceding session, because the marketplace juggled worries of supply shortage and slower demand. Brent crude rose 13 cents, or 0.1%, to $94.25 a barrel with the aid of 0330 GMT, at the same time as U.S. West Texas Intermediate crude became up 27 cents, or 0.3%, at $88.81 a barrel. Oil expenses have come beneath stress this week as the marketplace fretted over the impact of inflation on monetary increase and demand, even though signs of tight deliver saved a ground underneath costs. OPEC's meager deliver hike highlights the constrained capability the marketplace has to handle similarly shortages, ANZ research analysts mentioned. For September, OPEC Plus is ready to elevate its oil output goal by using 100,000 barrels according to Day. The hike is one of the smallest given that OPEC quotas have been delivered in 1982, OPEC records suggests. The global crude oil markets remained firmly in backwardation, wherein prompt expenditures are higher than the ones in future months, indicating tight substances. Supply worries are predicted to ratchet up in the direction of winter, with the European Union sanctions banning seaborne imports of Russian crude and oil merchandise set to take impact on December 5. With the EU halting seaborne Russian imports, there's a key question of whether or not Middle Eastern producers will reroute their barrels to Europe to backfill the void, RBC analyst Michael Tran mentioned. How this Russian oil sanctions policy shakes out may be one of the most consequential subjects to watch for the rest of the 12 months, Tran added. For now, signs and symptoms of an financial slowdown capped fee restoration. Recession worries have intensified following the Bank of England's warning of a drawn-out downturn after it raised hobby costs by using the maximum because 1995. If commodities aren't pricing in and drawing close financial recession, they is probably getting ready for a stagflation technology whilst the unemployment rate begins selecting up and inflation remains excessive, CMC Markets analyst Tina Tang said. Investors are focused at the U.S. employment report to be released later in the day, that is expected to expose non-farm payrolls extended by using 250,000 jobs ultimate month, after growing with the aid of 372,000 jobs in June. Any signs and symptoms of electricity inside the labor marketplace should feed into fears of aggressive steps by means of the U.S. Federal Reserve to scale back inflation.